So the sooner you start investing, the sooner you can start building the income streams and then hopefully the appreciation, assuming markets cooperate.
Welcome to Freedom at the Top, the podcast where professionals from various industries come together to share their journey towards reaching peak potential. I'm your host, Rafael Ramos, and I'm excited to dive into insightful conversations with our guests. With Eagle Summit Equity, this podcast aims to inspire and empower you to reach new heights in your personal and professional life. So sit back, relax, and let's enjoy the journey towards freedom at the top. Thank you, Vessi, for being on the Freedom at the Top. So about Vessi Kapoulian is the founder of Dream, Believe, Achieve Capital Group, a real estate investment firm based in Los Angeles, California. She is a former commercial lender turned real estate investor and an immigrant who pursued the American dream. Now Vessi helps high-achieving professionals and business owners generate additional passive income streams and achieve tax efficiencies through well-vetted, cash-flowing investments in commercial real estate. Vessi also helps investors new to multifamily learn how to effectively and efficiently vet apartment deals in 5 easy steps. Well, Vessi, thank you again. And may you please share more about yourself and your journey?
Absolutely. Thank you, first of all, for having me on. I'm really looking forward to our conversation and adding value to the audience. Very happy to be here and appreciate the kind introduction. But yes, one could argue my real estate journey started way back behind the Iron Curtain when I was a little girl growing up in Bulgaria. And at the time, there was not a developed stock market. And when people talked about investments, they often referenced hard assets like real estate and commodities like gold, silver, and such in the form of jewelry. Basically, assets that were not necessarily cash flowing, but had store of value. But it was always my dream to come and study in the US. I was very grateful that I was able to make that happen by earning a full scholarship because I didn't come necessarily from a family of means who could afford to finance that type of educational pursuit. But once I arrived to the US, I followed the more traditional path of going to school, getting good grades, getting a corporate job, and then started to climb that corporate ladder until a few events of adversity, which I'm happy to also share and talk about, helped me discover that I was climbing the corporate ladder, but even more so helped me ask the question, well, what if something happens to me and I'm next? And what I'm referring to is a number of restructures that my own employer went through. I saw many of my colleagues, people I've worked with for many years, being let go. And it didn't matter how smart they were, how talented they were, how hard they had worked, right? The decision was made. And then before that, you probably remember the great financial crisis where a lot of people were left without jobs and with their stock portfolios decimated. And so I thought, well, what if I'm next, or what if I'm 65, right? And the stock market crashes, and my entire retirement almost evaporates. What will I do next? And I think it's in those moments of crisis where we tend to resort back to our foundation or maybe habits. And not that real estate was a habit, but I thought, well, I'll just buy a single family home or two, and that could be my small little retirement nest egg to shield me from such events that could also happen to me. And so that's when I made the decision. I took that very first step. I currently, at the time, and I still do, reside in California. And my goal with purchasing a property was cash flow. So naturally, that led me to consider investments out of state. And it was a scary first step, but I'm really glad that I made it because it opened up a whole new world of opportunities and created more optionality in my own personal and professional journey.
Thank you so much, Vessi. I really appreciate how you shared, okay, what if happens in the future, and then just having the vision and even sharing insight. Okay, how do you even prepare for the unexpected? So I appreciate that, Vessi.
Absolutely. It could happen to any of us, and no one is insulated. And it's not a reflection on you or of you in terms
Hmm.
of how smart, talented, or hardworking you are. It's external circumstances that we don't control. But in those moments, I tend to focus on, okay, what is it that I can control? And for me, that
Hmm.
was change the mix of my portfolio by introducing more real estate.
Yeah, I love that mindset where, okay, this is what I can control personally, even though it's external, no matter what talents or qualities I have, and just moving forward. So that's a great nugget of wisdom, Bessie.
Absolutely. Yes.
Let's jump into some of the topics that to share through Vessi.
Yeah.
With the current environment, or even through your past experiences, may you please share some insights going into how do you vet the deal? How do you underwrite your deals, and how the audience can learn from them?
Absolutely, yes. So I was very fortunate because in my professional career, I was a commercial lender and headed the risk management function within my division. So that gave me very valuable and helpful perspective of how lenders evaluate deals, how to think through the risks, think through the downside. Now, as an investor, we have a slightly different perspective, right? As
Hmm.
investors, we get paid to take risks. So, as an investor, you also want to understand the upside. So, as I made a transition from a commercial lender to a full-time investor, there was definitely a transition period, and took some adjustment for me to really get comfortable with the upside as well. And so I think now I'm at a place where I have a more balanced approach. But I'm grateful, definitely grateful for this experience I have. And so as I take a step back to evaluate a deal, the very first thing that I look at after I evaluate the sponsor, right? Because in as lenders, we often used to say, and probably still do, other vendors still do, is that people pay back loans, right? Not property. So first of all, evaluating the operator, their track record, communication, style is extremely important. But once you move that past that point, before getting into the actual deal and numbers, number two for me is the market, because that could be the headwind or the tailwind, right?
Hmm.
Depending on which part of the cycle you are. But understanding the market also helps you get a baseline of what some of the key assumptions are that once you start underwriting a deal or analyzing a deal, you can apply. And so, for that reason, I spend a ton of time understanding that what the underlying trends are for job growth, population growth, job diversity, supply, demand, historical vacancy rates, historical rent growth pace, and such. And really, the deal is the last thing that I look at once I have those data points. And typically I focus on five key areas, which is understanding the top line or the rents. Are the projections realistic? Are the vacancy assumptions realistic? Are they in line with the historical trends that the market is exhibiting? Are they in line with the current supply and demand dynamics? Number two is expenses. Are they realistic? In some markets, a 30% expense ratio may be quite reasonable because
Hmm.
taxes and insurance costs are lower. But in other markets, say for example Florida, if I see a deal with a 30% expense ratio, I get a little suspicious, right? And you want to understand, are the adjustments made appropriately, especially taxes, insurance, and other expense line items consistent with your business plan? Have you adjusted those, and based on that determine, do I feel good about the expense line? Number three is the debt structure. That's extremely important. So I want to ensure it's aligned with the business plan. If we're looking at a 5 to 7 year tenor of holding the investment. And if we have
Mm-hmm.
a, say, a traditional stable value add apartment deal, getting low variable rate bridge loan probably doesn't make sense, right? And ideally, I would like that rate to be fixed because as investors, we do take risks, right? And one of the risks
Yes.
to understand when we enter a deal is interest rate. So if I can mitigate that risk by fixing the rate, that's one less thing for me to worry about as an operator or as an investor. Um, Number four is reserves. I would like to ensure that the deal is appropriately capitalized by way of operating reserves and capital expenditures reserves. Ideally, I would like to see the capex or the rehab work that will take place, the funds for that being raised up front. Because I don't want to be 100% reliant on cash flow to fund those, since my entire business plan in a typical stable value ideal often depends on your ability to include those improvements,
Mm-hmm.
interior or exterior, to the property. And number five is the cap rate, entry and exit cap rate. Um, I would say cap rate, along probably with the rent assumptions, has one of the biggest effects on the pro forma valuation or pro forma returns of a deal. So that's extremely important. I personally prefer to assume that things would get worse before they get better. So
Uh-huh.
personally, for me, I'd like to see cap rate expansion. Again, making an assumption that the market will be worse off from where we're at today. Of course, nobody has a crystal ball. Nobody knows how much worse or how much better it would be. But I would like to bake that up front. So if there were surprises, I have accounted, if not 100% for those, which is very difficult to do, at least
Yes.
for part of those. So I have some cushion. So these are a few key metrics or few items that I look at when I take a step back and analyze a deal. So I'll pause here because I know I shared a lot, and see if there are follow-up questions.
No, sure, sure. Bessie, thank you for the five insights of vetting and when you're looking at the deal and underwriting them. Just some few questions to help the audience or even fellow real estate investors. Say you're looking into doing a commercial loan and then being in the commercial lending space. Like what would be some insights to be set up for success, say even though if it's their first deal or doing more deals in the future?
Excellent question. As a lender, right, we start with the people first. Who are they? What is their background? Of course, you do traditional diligence by
Hmm.
way of background checks, but you want to understand what their track record is, what their liquidity and net worth is, and their skin in the game, or willingness to put
Hmm.
skin in the game, because it's lenders are our biggest partners typically, right? Contributing anywhere from 50 to 75% of the purchase price of the property. Um, but they don't typically finance 100%. So it's important
Hmm.
for me, for many lenders, to see that participation, but also some depth of the pocket so the owners can step in if something was to go wrong. And then very similar, I guess, from an investor perspective, understanding the market. They may have more appetite for primary markets versus say tertiary markets, and that
Hmm.
will often may often influence the terms that you see, the rates, the minimum debt service coverage covenants. And then the property itself is analyzing the numbers. The lenders typically value the property based on actuals. They will ask for your pro formas because they want to understand your business plan, but they're
Yes.
not going to base the loan proceeds based on the pro forma or what the property could be. They will lend to
Yes.
it based on what it is today. And so, of course, curating not only a property in a strong market and sub-market, but also a property that is cash flowing, because ultimately it's cash flow, right, that pays off the debt, is key. And again, I'm speaking for more traditional lenders like the banks, the agencies. Of course, if you have a heavier lift project, then and you know you won't be cash flowing in the first year, maybe even two, depending on the size of the rehab or the size of the property. There are other options there in the form of bridge loans, which are short-term loans. And
Mhm.
in that case, those types of lenders will definitely want to see depth of the pockets, the track record, the experience, because ultimately, and then understand the takeout risk, right? If they have confidence in your ability to complete the rehab on time, on budget, and improve the
Uh-huh.
valuation as expected, as well as some form of self participation, whether that's in the form of a guarantee or size of the liquidity and net worth, then they become more comfortable with mitigating some of those risks. So it really boils down again to the people and then the underlying collateral. And then depending on that, they will determine what type of structure in terms of the rate, covenants, tenors, and so forth to propose to ensure the risks and mitigates are aligned.
Thank you so much, Vessi, for insights for additional and potential success for when dealing with commercial lending as a former commercial lender. So thank you so much for that. Um, Wanted to also add another question and to help our audience as well, whether they're going to be passive investors or going to be the active real estate investor. You've mentioned knowing the market well. Um, may you please share some insights in your experience? Like, of course, you can't predict the future, have a crystal ball, but and then we do want to cover as many bases as we can and then predict reality. But can you share like some insights just to how to be even more effective or efficient when looking into a market, whether it's new or you've been in the market for a while with your deals?
Yes, absolutely. If you're brand new there, we're very fortunate in today's day and age, right? There are a lot of publicly available free resources for
Yes.
people to access, including governmental agencies that publicly share their data, where investors can access key trends such as population growth, job diversity, unemployment, median household income. Now, for other there may be even articles, right? For certain resources like supply, demand, absorption, typically these are subscription-based programs. But if they're considering investing in a deal, very often the sponsor, the lead sponsor, right, is or
Mhm.
the fund manager is also looking at that data. So they should be able to share that information with the investor, meaning data that they typically obtain from paid subscriptions.
Yes.
And then understanding the neighborhood, the market. Again, there are a number of sites there that could give you a good idea of the crime activity and whether people love living in that neighborhood or what some of the issues are. I would say that the data is very important, but it's not cannot be 100% substituted for local boots on the ground knowledge. And so if you happen to be investing outside of your market in an area maybe that you're not familiar with, maybe you didn't go there to school, maybe you didn't travel there, but perhaps you have friends or relatives who live in the area, so they can hopefully quickly drive by the property and give you their local honest view. And if you're an active investor, hopefully one of your partners, right, is in the area so they can check it out, or you have a contact or a trusted property manager, boots on the ground, who could give you objective third-party feedback
Mhm.
on the area as well as the property condition, at least on the exterior. But these are some resources investors can tap into between the publicly available data and then local boots on the ground in order to form their own opinion and risk tolerance of the market.
Have you considered how your money can work for you? Explore more about financial and passive investing on your terms. Enjoy freedom on your time with family and life. Visit eaglesummitequity.com today. Thank you so much, Vessi, on
Mhm.
market insights and definitely having boots on the ground wanted to also share, it does make or break potential deal you're reviewing. Some experience are, okay, this deal or this property, it makes total sense. The price is right. The returns for our potential investors make sense. Everything checks off, even the market. But yes, having boots on the ground, okay, um, additional insights like, okay, crime, just the area, or even things you don't even know from research. Totally on the same page with you, Vessi.
Absolutely, yes.
Yeah.
That can make or break a deal. And I cannot tell you how many times I have deals coming across my desk and
Mm-hmm.
the numbers look beautiful on paper. And then when I look up the area, because usually that's where I start before even digging into the numbers.
Mm-hmm.
Turns out there are frequent shootings in the area.
Wow.
Maybe the median household income is so low that it doesn't
Mm-hmm.
support the pro forma rent. Um, so yeah, it's definitely a key variable to understand because the things that look good on paper may not
Yes.
be realistic or I, I guess another way to think about it is yeah, the returns may look great on paper, but there is a reason for that, right? Because there
Yes.
is higher risk and therefore higher probability for loss.
That makes total sense. Thank you again, Vessi.
Mhm.
Um, the next topic, we want to go into, okay, um, we want to be, or our audience wants to be potential investors for you and I. And okay, how do you want to build a portfolio, but we're still working a W-2 job initially? So either we can be passive, meaning where, okay, we share our hard work funds or funds we don't use currently, or if we're being a passive active investor where, okay, we'll do the hard work. um, may you please share some insights on, okay, we do have a busy W2 day. How can we build our portfolio?
Absolutely. And I really appreciate you asking this question and really making the distinction between active and passive because a lot of people don't realize that
Mm-hmm.
there are options. There is more than one way to get involved in real estate. If you love what you do and plan on continuing to work for years and years, and if you're very busy, right, the passive investing option is a great route to take. And that is not to say you could just jump into it. I always tell investors or prospective investors that the first step after you've gained clarity on whether you want to invest passively or actively, which asset class you want to invest in, what your personal risk tolerance and expected returns are, is to really get educated. Get educated on the asset class, get educated on understanding deals, and connect with various sponsors. So how do you do that while you have a W-2 job? So thankfully, there are a ton of resources nowadays, number of passive investor forums where people can join, and I'm happy to share some of those. I have a ton of resources on some
Nice.
of those sites on my own website. But that's where they can start interacting with other passive investors, learning from one another. There are courses people can take. Some are free, some are complimentary. Meetups and conferences is where you can also connect with other passive investors. But that is also where you can start connecting with sponsors or operators, syndicators. I know the nomenclature sometimes can be confusing here, but what I would recommend as a next step is then get on as many newsletters and lists as you can, subscribe to those, so you can start following some of those sponsors. I would encourage people attend the investment webinars and start looking at deals because the more you do that, the more
Mm-hmm.
muscle memory and reps you build. So when a good investment comes and you feel ready, educated, you've asked all the questions that you feel you need to ask to make a yay or nay decision, then that first step, even though it's scary, it's always scary, the first one, but you will have a good foundation to make that investment decision. And so I wish I could tell you it's easy, but
Mm-hmm.
everything I mentioned, whether that's doing online education, whether that's going to meetups, whether that's attending an online webinar of investment presentation, whether that's checking email, requires additional time. So For me, how that started was before and after hours, before work and after work, as well as weekends. And carve out as much time as you're comfortable with. If you can do 1 hour a week, guess what? That's better than zero. So start
Yes.
there. Start with 1 hour and maybe build up to more as your interest level grows. And once you cover one area, then you can shift your focus to learning another. But it doesn't have to be huge steps. The key, though, is to take action, right? Because in uh, real estate, in accounting terms, I would say it's a fixed
Yes.
asset, right? It's a long-term asset, and so it takes time for it to bear fruit. It's not a get-rich-quick scheme. Um, Typical syndication investment, right, has a 5 to 7 year hold. So it's not something that happens overnight.
Hmm.
And for people to create that optionality in their life by building additional income stream, it will take time to invest in a number of deals over time and start stacking up those cash flow streams. So the sooner you start investing, the sooner you can start building the income streams, and then hopefully the appreciation, assuming markets cooperate. For active investors, the steps are very similar, except that there is one extra one extra
Hmm.
one to take. And I always recommend joining masterminds or groups of like-minded individuals. That's what the journey I took, because I knew I
Yes.
wanted to be on the active side, and that's how I found a lot of my partners. It again, I want to be real. It came with a lot of hard work, and definitely
Hmm.
carving out, being very intentional of carving out the time before or after hours and on weekends to make those connections, to vet deals, analyze deals. Again, I'm live in California, so
Hmm.
for me it was important to find partners who are local to the market, so I don't have to travel too much back and forth. But you have to be close to the asset, right? When you're doing due diligence or later on as you're taking on a property. So leaning into partnerships, right? That would be for those who choose to be active, is a great way to accelerate your journey. So I'll pause for a second because I know I shared a lot, and happy
Yes.
to dive into any of these areas deeper if needed.
Oh, sure. Yeah, that's a super insight on how to be mindful or educated on how to build your portfolio, whether it's passive or being the active and working on the property. Just one curious question. Okay, on a personal level, that one decision to do your first property, that of course it can be unnerving. Like, what were the decision factors that helped you um, decide, okay, this will be a great property to work on?
Yeah, so for me, I had a very strong why, and
Mm-hmm.
really that's where it starts, with having a very strong why, want to make that decision, have that burning desire, as
Mm-hmm.
Napoleon Hill states, and for me that was fear, right? Fear was fear of what if that happens to me, fear of regret. I didn't want to look back 20 years from now and think, oh, I could have started it, but I didn't because I was afraid. So that really pushed me to take action. I found my first property through a local meetup. And again, I
Mm-hmm.
started my journey is very incremental, right? It's not a zero to hero story.
Mm-hmm.
I started with one single family home, then before I transitioned into a duplex, then did the duplex before I transitioned into an 11 unit joint venture, then did the 11 unit joint venture before I transitioned into large apartment buildings. But for that very first property, I found it through a local meetup. An investor there connected me. It happened to be in a market I had some familiarity with. I didn't want to get caught up in analysis paralysis, so
Mm-hmm.
I studied the market with some of the key performance indicators that I mentioned earlier during our conversation. For that very first property, I actually flew over there to visit the market,
Oh,
visit the
nice.
neighborhood, make sure it's consistent with the publicly available data that I
Mm-hmm.
was reading, which it was. I wanted to meet the team, develop my own comfort level. For the second property, which happened to be in that same market, I didn't necessarily fly there because we had developed that level of trust. I knew the area, the neighborhood, so it was all very much consistent with my first experience. But for me, it took not only the I call it digital diligence that I did
Uh-huh.
through online resources, but I also flew there, and that's what ultimately made me comfortable. Of course, I wasn't just going to jump in, eyes closed and ears closed,
Mm-hmm.
um, but it was really the why, the powerful why that pushed me to make that decision. And I knew if I waited any minute longer, I would be behind. And I'm glad I did it. My only regret is not starting sooner, but I think that's what
Oh,
most investors tend to say. But I'm glad I
yes.
started when I did.
Thank you so much, Vessi, for sharing your why and why start on your first property. Totally on the same page. Where okay, started as a passive investor, um, and then transitioned to active. All while I'm at the same time, okay, I have the fear of okay, what if the investment goes sideways? But at the same time, well, okay, believing in what you really want to do with intention. So thank you, Vessi.
Absolutely.
Um, let's go into involving your achievements. Like first one, like let's talk about how you built your real estate portfolio full time and then transition.
Absolutely, yes. So for me, the journey, like I mentioned, was very slow and steady and
Mm-hmm.
incremental. After that first property, I took a pause. Now looking back, I regret it. I wish I had just kept buying and buying and buying during that period. But I had gotten promoted, so my focus shifted for a period of time before I got back into it around, I guess, COVID time, you could say.
Mm-hmm.
But yes, after I got a couple of single family properties under my belt, and again, the initial idea was build a small retirement nest egg, right? And those worked well, and they were and still are cash flowing. I still have those properties today, and that's when the light bulb went on, thinking, wow, this is not just a small retirement next nest egg. It can be a pretty steady eddy income stream that I can build and lean on over time. And if I keep doing it, eventually I could potentially even it could even match or replace my W-2 income.
Mm-hmm.
And so the next logical question for me was, okay, well, how do I scale it then? And I did the math, and it was pretty scary when I realized, oh my God, I have to buy hundreds of single family homes or duplexes to get to that level. And at that point, and it's not only the time factor, right? The time that you would need to manage all these rentals, but also the capital, right?
Uh,
Didn't have the capital, and I wasn't making enough money, right? To channel and save enough to accumulate that amount of capital. And that's where partnerships really come in. And as I thought about, well, how do I scale that? For me, the next logical step was multifamily, because I started in the residential space. Multifamily is still in the residential
mm-hmm.
asset class, if you will, but I could also leverage not only my residential experience, but also my experience as a commercial lender in evaluating deals. So for me, multifamily was that natural next step. And so I made a decision, and I approached this with a attitude of humility, right? That okay, I've learned this as a lender, but I need to learn this as an investor and how investors look at deals. And that's when I joined a mastermind
Mm-hmm.
group of like-minded individuals, not only for the educational opportunity, but also for the opportunity to make connections. And that is where I met my now current partner. So I'm glad that I took that leap of faith, and the rest is history. In multifamily, again, I tend to start with small steps, right? And so my first deal was an 11 unit joint venture, and shortly after I closed on my first syndication, and I've closed on a couple more since then. So
Uh-huh.
so the rest is history. But what drives me now is I've gone through this journey. I've seen the benefits of it. So I want to share that with others who may or may not be aware of the opportunity and help them build their own financial freedom and create their own optionality by passively investing.
Congratulations, and just so exciting to for seeing the transformation.
Thank you. Thanks.
Thank you, Vessi. May you please share next one on how you transition from uh, being a W-2 employee to a full-time investor as well?
Absolutely. So here is where the story gets a little emotional, but I want to be transparent and vulnerable for the audience.
Sure.
So last year I walked into my office one morning thinking I'll have a meeting with my manager, and that turned out to be a layoff call.
Wow.
So I was told that our division is basically being dismantled. It's getting
Wow.
close, and so I had to say goodbye that day. It was my colleagues and I effectively had to
Hmm.
say goodbye because we were almost all of us were being let go. And that is when I, first of all, was very grateful that when the first round of layoffs had happened, I didn't just sit there and beat myself at the chest thinking, oh, I
Hmm.
survived because the better one. No, I survived because I was lucky. That was it. I was purely lucky and probably underpaid because those are typically cost decisions.
Yes.
Um, so I'm glad I took action when I did, because when that um, last layoff occurred, that ended up impacting me and resulted in the closure of our division. I had the option to choose. Do I go back to the corporate world? So that was one option I had on the table. Or do I start my own venture?
Hmm.
And when I did the math, I had sufficient savings. So I always advise people have at least 1 year, preferably 2 years of savings. A lot of people will say 6 months. So it
Hmm.
depends on your risk tolerance, right? But I would say at least one, preferably 2 years of savings. And then when I did the math, the cash flow that my investments generated that I had made over the years between the residential homes, the passive investments, and
Hmm.
then the active deals, um, they were sufficient to cover basic living expenses. Again, I'm not
Wow.
talking about living in luxury or anything
Uh-huh.
like that. So I definitely had to be very mindful of my lifestyle. But when I had that revelation, it was okay. So what's the downside? Is the downside is I fail, right? That's the worst case scenario. And if I do, then I still have the option to go back to the corporate world. Maybe it won't be the same role, it won't be the same pay, but I won't be homeless, right?
Yes.
I have options. So when I realized, okay, well, if that's really the downside, I I don't know if I'll have another opportunity again
Hmm.
like that to start a business on my own, and a thriving business that can and will impact others in a positive way and change lives. I realize now is the time to make it happen. I don't want to be 60 years old and look back and say, wow, I should have started that 20
Wow.
years ago, and live a life of regret and unfulfilled
Hmm.
dreams and goals. So yeah, I decided to bet on myself, and thankfully, because I had been doing these activities over the years, effectively I had a second career option on the table, and I chose to take the road that was very scary and less traveled, but real estate is the vehicle that created that optionality for me, and for that I'm forever grateful.
Thank you, Vessi. And then lastly, um, the opportunity to transform lives by helping others invest in real estate. May you share some achievement there as well?
Absolutely. So there are two ways that I help investors. One is to passively invest in apartments, and I create a ton of educational sources and content because I believe an educated investor is an empowered investor. And so I received some very positive feedback in terms of the quality of the content I create and how people have found it helpful so they can make an educated decision.
Hmm.
over the years, what I also realized that there is a very big need, especially with investors new to the space, to learn how to effectively and efficiently analyze deals. So when I started doing this full time, I had more time. So I created a full-blown curriculum and developed a
Wow.
course for investors new to multifamily
Hmm.
on how to effectively and efficiently analyze deals. And so it's been really rewarding to see the success of my students. They're already doing deals, they're vetting deals. And I've received positive feedback from them as well. So it's that type of feedback when I hear it from people
Hmm.
and or when I see their results is the biggest joy and fulfillment I get.
That's amazing. Thank you for sharing your achievements as well, Vessi. Let's go into the next area on motivation. What motivates you to reach peak potential?
I love that you asked this question. So I think I talked about one of the motivators, which
Hmm.
is fear, right?
Yes.
Initially it was fear of what if I am next and the fear of regret. But it's also the desire to live up to my full potential. I believe we're all brought here, right, for a reason, and we have our unique skills and talents to help people and impact people in a positive way. And so when
Yes.
I think of a legacies, I think of what impact am I creating through the work that I do every day. And so that is also one of my drivers, the ability to leave a lasting positive impact through real estate investing. And I have some charitable causes. Right now I'm mostly involved monetarily, not as
Uh-huh.
much with time, but I'm hoping as I continue to grow and develop the business that I gain also more time freedom. I have flexibility now,
Hmm.
right, which I didn't have with my W2 job before, but I want to be able to create bigger impact and help in bigger ways. Um, so that desire for freedom is also what's driving me, I guess, on a more um, positive way, in addition to the fear.
Uh-huh. Oh, that's amazing. Where yes, you give back, and you do have a positive impact as well. Well, thank you. Next question would be, okay, we face challenges, but how can you stay motivated when you come across challenges in your journey?
Yeah, so there are two things. One is my faith. So that's probably one of the greatest gifts my family, grandparents, my godmother gave me. So I lean on God.
Hmm.
Like to pray, take a moment to say my prayer, but also I approach it with a sense of gratitude because typically fear or despair and gratitude don't reside together. So I take a moment to intentionally, I make a moment to think about all
Hmm.
the things that I'm grateful for. And lastly, think, okay, what is this challenge teaching me? Now, I don't always have the answers because
Hmm.
sometimes the answers come years from now, and I've definitely had those experiences in my life. But I try to lean into the pain as well and realize what is this teaching me? What am I learning from it? How can I use it to be a better me, but also how can I use it to help others? And so it's those three steps: God and prayer, gratitude, and taking away the lessons learned, leaning into the pain.
Thank you so much, Bessie. That's amazing motivation as well. Let's go into the next segment of the fun round.
Yes,
Uh,
I'm
the,
ready.
the next first question: what is your favorite food or restaurant?
Oh my goodness, so I'm vegan vegetarian. So I here in LA there's the
Hmm.
Grain Cafe or Cafe Gratitude, and those
Uh-huh.
are two places that I like to go to. Cafe Gratitude is more well known. Grain Cafe is like a hole in the wall, but it's
Uh-huh.
absolutely amazing. So if you're visiting LA, check one of those two places out.
Thank you for the recommendations. We'll definitely check them out. Next question. What advice would you give to your younger self?
Oh gosh, get started. Don't be afraid. Get started. And that's what actually inspired the name of my
Mm-hmm.
company, Dream, Believe, Achieve Capital Group, right?
Wow.
Dream is we all have goals, but you have to
Uh-huh.
start with clarity on what you want and most importantly, why you want it.
Mm-hmm.
Believe is believing in yourself and you often overcome those limiting beliefs by surrounding yourself with like-minded individuals, coaches, and mentors. And achieve is really about taking action, right? Because without taking action, those dreams remain unrealized. They just remain up there in the sky, so in the clouds. So it's important to take action and make those dreams a reality. So I wish I had started sooner. I wish that seed in real estate, right, had germinated earlier, but
Uh-huh.
often it's those events of adversity that provide more clarity or open our eyes. So I'm grateful that those moments, although unpleasant at the time,
Uh-huh.
happened because they opened up new doors and opportunities that I unintentionally had closed before.
Wow. Great advice for your younger self, Vessi. Um, if you could have a deep conversation with any historical figure or fictional character, who would it be?
Oh wow. I always go back to my grandma. She
Uh-huh.
passed away when I was younger, and
Wow.
I still have very fond memories of her.
Mm-hmm.
But I wish I had experienced my adult years with
Mm-hmm.
by spending time with her. So would love to uh, bring that time back if I had the power to.
Wow. Well, thank you for sharing. Yeah, definitely great memories with family. And then next question, if you could learn a new talent, what would it be?
Oh wow. I have so many that are coming to mind. I
Mm-hmm.
have chess. I want to learn another language. I already speak about 5 languages, but I want to learn more.
Oh, wow, five.
Uh, and then, so I would say chess, maybe
Mm-hmm.
Portuguese. That would be another language. And
Wow.
then I want to learn, get back rather to dancing rueda. It's so
Mm-hmm.
those would be maybe three things that come to mind.
Wow, those all sound like fun. Thank you so much, Vessi, for the fun round of questions. Um, Involving our interview, is there anything that we missed or that you would like to add as well?
I would just say to the listeners, believe in yourself and know
Mm-hmm.
that if you can believe it, you can achieve it
Wow.
and take action. Again, real estate was the vehicle that worked for me, but that is not
Mm-hmm.
the only vehicle. You're starting a business, a side hustle, there are other avenues that you can take. The key though is to take action. Don't delay
Mm-hmm.
because in most cases the time lost is time lost. So to
Yes.
make it up, you either have to put in more money or take on more risk, and that may or may not be aligned with your risk appetite or goals. So um, take educated, thoughtful action.
Wow. Well, thank you, Vessi, for the great words. Involving opportunities and to reach out to you, what is the best way to reach for the audience to reach out to you, Vessi?
The easiest way to connect with me is through my site, dbacapitalgroup.com. D as in dream, B as in believe, A as in achieve. My contact information is there, as well as a ton of resources on passive investing. And for people who are looking to learn more about underwriting, especially investors new to the space, masteringmultifamilyunderwriting.com is a site with additional resources in that area.
Perfect. Thank you, Vessi, for sharing how to reach out to you. Um, Thank you so much again, Vessi, for being on The Freedom at the Top. A lot of great nuggets of wisdom and your journey and insights for our audience. Thank you again, and just have a safe one.
Thank you so much, Rafael. I really enjoyed our conversation. Thanks for
Thank you.
having me on.
Thank you again.
Thank you for tuning into Freedom at the Top. If you enjoyed today's conversation, be sure to subscribe for more inspiring content. Feel free to leave us a review and share the show. Until next time, keep striving for greatness and aim for freedom at the top.